Okay, so yesterday's two strong data, market moving data were there. One from UK, very strong employment growth, and we saw sterling rise more than one big figure. Then we had US CPI, which came lower than expected, and after hitting a new high, sterling dropped, and dollar in fact gained after the CPI data initially dropped and then gained. This was driven by some risk-off sentiment. All the three segments of the US markets fell. So I don't think CPI has any relation with these market moves. In fact, the lower CPI also is not being seen as a case for big comfort, because PPI was higher, and there are some components of the CPI which will have a higher indication in the coming days. Like used cars prices have dropped, but the rentals are going to go up. The wage inflation will be higher. So it's a challenge for the transitory team. So I don't think this will have any influence on the taper timing. If not September, November is when this is likely to be announced. And there was one more data called National Federation of Independent Business Survey that showed that most of the small businesses are currently raising prices, and they are finding it easier to raise prices. So this means that in the coming days you will see price pressures increasing only. So nothing to majorly bank on the lower CPI. At the same time, US cases have again shown 140,000 yesterday. So that would be hindering the positive sentiment. Then I think taxation proposals are also being widely discussed, and then we have more data from UK this week. ECB officials, just like US, different people are talking different languages about inflation. Some are saying it's transitory, but people from Germany and all, they are very concerned about high inflation. So again, so if I have to summarize the view on the dollar, currently there is not a single factor which can move the market strongly in one direction. Hence, we should continue to move in the range. For some, it looks like investor head and shoulder for euros, or for some, it looks like investment head and shoulder for a dollar index. So it's not clear. I think we'll probably move in broad ranges till some new strong factor emerges. Possibly taxation and taper together have the potential to move the market on the upside for the dollar. EM currencies are perhaps more volatile because of heavy positioning in carry trades, though a strong reversal is not possible. So here also there is no evidence of a strong directional move, but central banks are ensuring that excesses are not seen, like particularly in China and India, central banks are quite active. So there's no clear-cut direction. We have to see how the stock markets behave going forward, and then dollar will probably take direction from any deeper risk-off sentiment, or those taper and taxation talks which are ongoing. Yeah, I'm done.
Thanks, Jayaram. So the inflation data in India also came yesterday, and that's a wholesale price inflation, and it came more than the market estimates. It came at 11.39% YOY, and market was expecting somewhere in 1060, 1080. That's one. And the another development which came in Indian market is basically there was an announcement from RBI saying that the single security limits, which were earlier they're looking at a 1.2 trillion rupees, they have increased that single trillion limit, single debt limit, security limit to 1.5 trillion. And that's good to increase the liquidity in the security. As you pointed out that US CPI data came lower than the expectations. There was a good dip in 10-year USD in USD, and that moved from 135 to 126, a good significant 9 basis point dip. So that basically market pricing in that rate hikes are still much away. Even tapering might happen, but rate hikes are away. Indian liquidity in Indian debt market is significant. On an average, everyday banking system is giving 8.46 lakh crores to RBI. Yesterday, they filled in by 8.46 lakh crores. And the overall durable surplus liquidity in the system is 11.40 lakh crores. And that says that it will take a good amount of effort to remove this liquidity. And the daily market should not get violated of this, because and that's for that reason RBI is conducting a 7-day reverse repo on a continuous basis. There's an important development important development. It's an important data point. Global debt is nearing $300 trillion, and that's significant. So we have already reached $296 trillion, and very soon we will cross $300 trillion. So that amount of outstanding debt is there in the system. And post CPI data, there was a kind of a bit of a dollar selling, and which helped gold, which was unable to stay above 1800. It touched a high of 1810, and as of now dealing above 1800. If it continues to trade above 1800, that will become a psychological level, and people will look to buy gold. Yeah, that's all from my side.